So what do we think about the on-chain analytics crew are talking about perhaps this is the last cycle? I'm trying to find out what type of data they're looking at on chain that's giving them that impression. I haven't seen yet anything that I'm looking at, that we're looking at, that would lead me in that direction. Have either of you?
No, nothing. I couldn't say anything that I could put my finger on at the moment. I think I've watched everything that I've recently from Willie. Well, I always keep in touch with what Willie's doing, and he hasn't quantified that statement any more than I think the last time I watched. And yeah, it would be nice. It would be nice for him. I think as we move through, he'll expand on it even more. So it's. But I haven't got anything that I can really add at the moment on that.
So the only thing that I'll add to this is that I'm not an expert on blockchain metrics, but I am looking at how the Metcalfe law, right, idea that basically the growth of Bitcoin is tied to the network and the number of users. And so when I saw that measurement, I put it out on Twitter, basically saying here was the growth of Coinbase, right? And I did the CAGR. And over basically 8 years, it was about 130%, which is remarkably similar to the 10-year CAGR of Bitcoin. Right. If you go look at the last few months and you're jumping by maybe 15 million users each time, it does make me wonder if you look on that the S curve that you show, Jordan, quite frequently, right, the adoption curve.
Yep.
That I wonder, are we closer to that 30% zone versus the 50-ish I forget what the number is. I think it's a much higher number. Yeah, the 80% growth versus the 33% growth. Because I think to myself, I'm like, well, how many more people are on the internet? And you have total internet users over there, and you have a billion users over there on the right-hand column. And right now we're at 68 million. So that kind of puts us at, if it's just Coinbase, it's near the 100. In fact, I think the comment was on Willie Woo's chart of that was effectively, he thought that 3x the number of users were actually out there. So you're probably talking 120 million users. So yeah, it looks like we're right there, right? But in my head, I just kind of say, well, there's another factor of 10 multiple in there. And is that factor of 10 going to happen this cycle, or is it going to happen next cycle? And I'm not sure, because once you get to a billion, you're in that 33% growth. And I just don't know. My gut tells me that next cycle may be the last cycle before we enter the what I would call super cycle. I still think there'll be ups and downs, right? But it won't be as so violent as it is today. And that's just purely looking at this user count business, because the users drive the whole community, right? And if we're at 68 million, or even 3 times that, 200 million, we're exactly where you are. We're, Raul, this is GMI, right? Where that chart should say 2024. That's the end of the next cycle, correct? Yeah, I believe.
Yeah, that's interesting, because that's where my gut is. We know, or I believe, that this cycle here, well, we're not seeing diminishing returns. I believe that we're going to be seeing returns that are on par or greater than perhaps last cycle. Either which way, going into the cycle peak here, the second half of the bull market, that's completely in play. We'll see what it winds up in a short amount of time. And then it'll be really nice to have that data point moving forward. But I believe, and I like the way you articulated this, using the user growth over here, saying that we're closer maybe to those 1 billion users. And then, from then on in, the growth might be diminishing. That's really where I am instinctively. I still believe that, positioning in here before the 2024, front running that halving event and playing that cycle, whether or not that's the last cycle or not, at that point, I do agree with you very clearly. That's when we'll be looking for more signs that perhaps that is going to be, more of a super cycle in definition, maybe lesser bear markets, maybe the bull market is lesser returns, diminishing returns. I like that. I also like a lot of the work Raul has been putting out, not just here talking about Metcalfe's law and Bitcoin, which is technology, and comparing that to the technology adoption curve using the internet. I also like how he took the focus from saying, all right, right now it's a $1 trillion asset. Where do I envision it? I envision that as being $100 trillion, or he says a $200 trillion asset. That Max Kaiser says there's about $400 trillion of money out there Bitcoin's competing for. And Raul's like, I'm going to underestimate. Let's just call it 100 trillion. Obviously, he thinks it's going higher than that. 100 trillion. I mean, that's a 100x from where we are in market cap.
I think that's where my gut is. And in fact, that's why on Twitter, I've been posting, my thesis for a long time now has been, we're going to flip gold, but gold's just the first part. You look at the bond market, that's your safe zone, right? And Raul said it a long time ago, but I think his thesis is that it's eventually going for bonds. You can't earn anything in bonds now, but if you're older, that's where you have to have your money.
Yeah.
And once we get past this, past this violent growth curve, like maybe in the 2028 timeframe, where would you want to have your store value, right? I can't imagine it would be gold, 10 years from now, because the metaverse will be here, right? The internet will have digitized most of everything. You'll go order, something at a restaurant, and an AI will take your order, and a bot will show up and deliver it, right? Everybody's going to pay with a digital currency. It may be a USDC, but the store of value, I think, is still going to be something like Bitcoin or something similar in the cryptoverse. That's kind of where my view is, but that's a long-term view, but that's kind of where my gut is. And if that's the case, then this right-hand column is almost off, because now we're really talking, in terms of dollar value, I mean, a huge amount of, you look at the finance system, it's multiple, it's multiple trillions, it's just huge number of people, right? So it really just makes me wonder. I'm like, is it underestimating over the long haul? And I think it might be underestimating personally. That's how I'm kind of looking at it. I think that's kind of, I don't know, maybe Ian can reflect on this a bit, because I know he's a huge fan of Cathie Wood's. And I think that's kind of Cathie Wood's argument too, right? That the exponential growth is coming. There's going to be all these exponential technologies. It's the fourth industrial age, right? We're basically going to see the digitization of everything. And the baseline currency for all that's going to be a digital currency. It's not going to be dollar bills or gold or anything like that, right? It's going to be something native to the platform. Yeah, Jack Dorsey, the internet is going to need have a native currency, and he thinks it's going to be Bitcoin.
I think you're just at the cusp of a massive convergence of S-curve adoptions. Yeah. So think about it. You've got baby boomers that are going to come to the end of being the dominant demographic. Yeah, you get the start of the millennials and the Gen Zs. They're all about digital. Yeah, so that's a transition. You've got the bond curve slowly going down, and you can see over the last 40 years, that signal from Raul, that's his, that's what he's followed. That's his trade of his life. That's eventually going to go to zero. Then you've got all the exponential age technologies that Cathie Wood has alluded to, that all came to people's forefront in the 20,000, the turn of the millennium, and it wasn't ready. So now, 20 years later, they're ready. As she would say, they're ready for prime time. So you've got that sort of change that's also going to happen. You've got Jeff Booth saying the technology, the change of technology is more in front of you than behind you. Yeah. So maybe it's because these are the people that I look at more than other areas, but it just strikes me that you've got so many different factors all pushing in the same direction. And then you've got a government which since 2008 not a government, but a world that has just been printing, they've said MMT. I mean, I think what Raul talked about last weekend really hit a chord with me, which is we're no longer allowed a recession. This recession, I wrote it down on notes today, is the biggest recession of all time, of all recorded history. It took 2 months. Right. Yeah. And they just printed their way straight out of it. Yeah. So his take is that everything stays in a band, and that they are, if it goes down, they print. If it goes up, they print, or they do sort of yield curve control. yeah, and they just keep on printing to keep it in the curve in the channel until they, they get to the point that they want it to. So yeah, I mean, I think that's why you're seeing the adoption. I think the thing that I was thinking about that I struggle to reconcile when it comes back to the point that you asked about the on-chain. This cycle is hard to know how you will see. It's muddy. It's had its waters muddied by within 6 weeks or so 6 weeks before the halving ish. We effectively had the stimulus from
the dollar liquidity crisis.
Yeah, and it's which one of those had more effect, and how do you weight each one? So to be able to say when we get to the next halving, was that the impact, or was it the halving that was still the impact? I don't know. I don't know the answer to that. I'm just that's the big sort of difficulty at the moment, and I guess that's why I'd like to understand what the on-chain is saying. But all I can imagine, everything between now and 2024 is bullish as far as adoption, and yeah, and maybe they're seeing, they're not, if we don't get this blow off top, then then do we see this wave up, yeah,
right,
and then so you don't see the pronounced top, you don't see the bear market, we just carry on grinding up. And when I say grinding up, it won't feel like you're grinding, you'll still be going up at a price that people are not used to. I don't know, I mean, that's just me talking out loud.
No, that's a good thought. Maybe they're not really looking at what's happening on chain, but what they're assuming is, because whether it's through the rate of adoption, the amount of new wallets being opened up, maybe they're looking at, what are those, tripling every year or something? I forget.
So they're seeing new adoption going faster and faster. I believe that new adoption will only become more exponential as you've got all these technologies that are making the internet and technology just more exponential. You've got people that are coming into that space. That's another driver.
What a great thought to be thinking that maybe what they're looking at are different factors, including what could be like a flood of institutional money. Maybe they're accounting for the waterfall break of the bond market. I don't think that the bond market slowly comes into Bitcoin. I think that when that money comes in, it's going to be a rush. I can't really foresee that happening or transpiring over the next 4 or 5 months. I mean, anything's possible, but everything looks like, the Fed is working towards just keeping things as stable as possible until they start tightening, and then they break the system again, and then need to go ahead and expand the balance sheet again, and just like implement massive quantitative easing purchases of securities monthly again. Whether Raul's right and that comes at the end of the year or not, I don't see anything going on in the financial system that would disrupt what's happening right now over the next 4 or 5 months. It would be a black swan event that would cause Bitcoin to move into some type of last cycle. I don't think on a supply and demand level, alone that has the possibility of happening. Because even if you see this fall and into winter, a country, even another country adopting Bitcoin, another major company, S&P 500 or multiple, taking Bitcoin positions, I don't think it's going to create enough of a demand from what little supply there is out there from shooting doing its thing. And eventually there's not going to be someone to step in there and buy, and then the bear market's going to come quick. I think it's going to play out exactly as it has in past tops, and including that bear market. Everything to me, including the hint when we saw that 53% drawdown, people are saying, oh, in the bear market in the future, we'll only be looking at a 60% drawdown. Well, in the bull market, we had a 53% drawdown. That leads me to believe we should see, because of the massive speculative mania bubble, the unfolding of that bubble, which takes a lot of time, and a lot of damage has to be done to repair what has taken place.
Yeah, I agree with that. And, I think there's, I don't know, if I go back to my just basic investing days, there seem to be two types of people in the world, right? There are price people and then there are fundamentals people, right? And I'm not saying they don't rarely kind of, go together, but it seems like when you listen to people, you have people who like, dig into the balance sheets, right? And they don't worry about price. They worry about whether the balance sheet looks good and whether the revenue looks good. Do they have too much debt? And people invest based on that, and you wait for the long haul, right?
Jim Rogers type investor.
That's who I was. I mean, I look at that now. I find it interesting because that's where I came from.
Right.
But when I came over to here, I know people would say, well, the blockchain metrics are the fundamentals. Coming from an engineering perspective, I look at the blockchain as a debug environment. I don't see it as I'm sure there are fundamental material things that you can draw from it, but in the end game, it's the goes into and the goes out of that makes the most impact. So if I draw a big black box around all of those metrics, right? Really, the only thing to me that matters are like number of wallets and number of people that are using it, right? Things like that. Like the hash rate and all those other things, I think they're important, don't get me wrong, but they're all a function of things coming into the system. So, I mean, it's more of a signal to me to see number of users from Coinbase going up than going in there and seeing the hash rate drop. And people are making all these assertions about, well, hash rate dropping is associated with price dropping. And I'm like, I don't know, weren't people scared? China exited the market. People got scared and people left and price dropped. It's a chicken and egg thing, right? The hash rate dropped. I don't think hash rate dropping had anything to do with the price dropping. The price dropped because China tried to basically destroy Bitcoin by, executing all of its hash, all of the people doing hash rate activities, all the miners, right, and basically excluded them from the environment. So, I'm not going to downplay any of the blockchain stuff. I'm not an expert.
Well, it was super useful. Do you remember May 14th? It was not just the Elon tweet, right?
Yep.
But also the on-chain analytics guys were showing those massive inflows onto Binance specifically, right? We saw a record amount of funds transferred to Binance, and then you saw that massive, anomaly. I think it still well could have been, right? But you saw that breakdown, and then you saw the 2 days later those funds go back off of Binance. So for short term, that information could be very useful.
Right. Absolutely.
Yeah. And
it's almost like if I were back in the business world, if you have a meeting like this and you're in a sort of an echo chamber, which I think we a little bit are right here, right? The first thing that you would do is seek out one of these, blockchain experts and bring them on your team, right? And I think you're talking about that now, right? You're saying, hey, if we can get Alan AU or Alan Al, right, chatting with us, right, on occasion, or Clemente or whoever, one of these people that looks like at all those things,